I'm Jim Check. You're watching Kelowna Now with me, Jerry Redmond, and we're here with the REMAX Report.
Hey, Jim, how are you this week?
I'm doing well. Look at the weather behind us, the live shot. Amazing living in this beautiful valley.
Other than the fact it's -9 on the
Minus
thermometer,
9.
Jim.
Yeah, you can't feel that in here, but it
no,
is.
you can't feel it in here. The lights in here are hot, for sure.
Hey, but there's no snow, right? So that's a good thing. And the valley, lots of snow on the mountain. I just did the big white snow report. Lots of snow on the mountain. Distracted. There's a police officer down there pulling somebody over.
There you go.
A bad person, I guess.
The windows and the view up here are too nice to be distracted by everything out there, for sure.
There you go. Market's showing a little better, right, for sure?
You know what? It is, and it's the nice thing where, over the October, November, December, and January have all shown increases over the previous 2 years, which is nice. Sales are up. But, prices aren't moving up with that. You do see the odd story about how the market's become buoyant and stuff like that. It's not quite a buoyant market, but it is starting to show definitely improvement over the previous couple of years.
And those interest rate cuts obviously helping a lot.
They do, for sure. Yeah. It started in October after that first half a point cut. Then the second one kept it going through. When you start to look at, numbers being positive in December and January, it's showing some signs of life, and lots of discussion about where the BOC is going to go over the course next year, but we'll get into that a little bit later.
Sure.
But for single-family homes, the biggest thing is the sales for January were up 41% compared to last January. So it's a big jump up.
You got that chart there, Ronald?
The hard problem, or the thing about that, is that you kind of got to look at is prices are, marginally up. Days on market are same as they were a year ago, but sales are up 41%.
Wow.
But so is the current inventory. So when you start to look at the amount of sales and things like that, we're still showing we've got 10 months of inventory. And what that means, if we didn't list any new homes today at the consumption rate we have right now, it would take us 10 months to clear out the inventory. That still puts us strongly into a buyer's market and not a seller's market, or even a balanced market.
And could that likely be because a lot of people weren't selling as the markets were tough? They were just kind of holding stuff off the markets?
I think we've stayed fairly consistent in the amount of listings. It's picking up a little bit. There's definitely a lot of people that were on last year that took them off in the fall, and they're starting to come back on, especially with the news reports and people hearing that it's a little bit busier out there. We are seeing stuff come onto the market a little sooner than normal. When we have days like this with no snow, it keeps our real estate market a little bit stronger. We're covered with 2 feet of snow. So.
Yeah, spring usually kind of gets a lot better for sure, right? Like people get out there and they start looking, right?
Totally. You get a lot of the segment of population. Nobody really wants to move when you might have wake up to 6 inches of snow the day your moving truck's showing up. So the winters can definitely be a little bit slower. Mm-hmm. But as far as the condo market goes, again, we're seeing a little bit of a price decrease from the average price sell, but sales are up, 10%. Days on market are up, and so is the current inventory. So again,
lots of choices.
We've got about that 10-month supply of inventory again, so we're still, firmly entrenched in a buyer's market, statistically speaking. But good product coming on, priced well, is selling. And that's really the key that we've talked about in the past, is making sure that your agent that you're dealing with is helping you get the right price on your property to make it sell.
How are those new developments? Are you seeing any of those listings come on? Like there's a couple that have just gone online there?
Yeah.
And they were supposed to be Airbnbs, but they're...
We're seeing, I noticed today, I looked at a couple, and there's definitely listings coming on, and a couple of the ones that have been recently starting to hand those keys over to people. Caban and Aqua being a couple of them that I looked at today, you're starting to see listings happen in those.
I see lots of rentals in there for sure.
Yes.
And I know when we were talking to the people at Aqua there, and they said that there's only 20 people that have moved in.
Yeah, and that's a big building for only 20 people so far moving in. So.
And they don't look like there's a lot more moving in. So there's a lot of rentals in there for sure right now.
Well, I was talking to one of our property managers that I deal with quite a bit over the years, and yesterday, and he was just talking about how much harder it is to rent stuff right now. Prices have come down.
I see inducements too.
Yes, yeah. So the rental market in Kelowna has finally, it's gone from a famine to a feast right now. There's lots of opportunity to look at new product.
Yeah, I drove by a building and it said, available today, right? Yeah. You didn't see that before, right? You had to basically sign over your next of kin or whatever and, wait 6 months.
Get on a waiting list to get into the building you wanted to.
Get on a waiting list to be on a waiting list to be on a waiting list.
So that, has changed things a lot here, which hopefully will make it, again, more affordable for folks renting and things like that, and just trying to make it, because that money is being bought up and cost of groceries going up, that they're starting to save some money, which is great.
I did do a story just recently, and one of the things that was said, there's not a lot of new supply being built though. Like in the housing market, they say the cranes are coming down, but the cranes aren't going back up.
Oh, for sure. If you look in, the properties, and I just started to read an article this morning. I didn't get it finished, but where they talk about the supply chain or not supply chain, but the supply of new is going to dry up, and that was one of the things that we, the CIBC economists talked about in their report a couple months ago, was the fact that there are no new buildings in the process. Which, once this inventory gets chewed up, we will end up with that.
We're going to have another, because it's a lag. Because even in Kelowna, we just did a recent report showing occupancy way up because of all these projects coming, like handing over the keys, but building permits way down.
Way down. And same thing happened in 2006 and 7, is when the market was crazy. A lot of new development, a lot of new towers. And then when 2008 happened, nobody started building anything new. We sat for a long time without any new projects really coming. There was an odd one here and there, but not a lot of them. And I think we'll see the same thing.
There's such a time for, like, when you start building a couple of years before you basically the project's ready to be occupied. And then, when things were great, and then all of a sudden things got bad, those ones finish up, but there's not a lot of new stuff going in the ground.
And the couple years to build it, but it's not only the building, it's the engineering, the design, and the planning. I mean, you're probably talking 5 or 6 years before you actually see a finished building. So if people have put the brakes on stuff, and we could end up with a shortfall of new product for more than 1 or 2 years. And just deal with the average townhome prices in Kelowna. Average townhomes, the prices are up. Sales are up, and days on market are up. So again, we're sitting here with that 10-month worth of supply. So you're starting to see a lot more of your first-time buyers hitting into this market.
I was just looking at that other chart there. I just noticed that the values, obviously in the condo, the prices are down. Everything else is up, kind of thing.
And marginally. But when you start to see, and it comes down to the hard part again, is when you're talking 38 sales, you get a couple of expensive ones sell, it can skew the pricing quite easily, right? So the biggest thing to do is just look at what's out there. And, I had someone talk to me this morning that they just had an approval come through to them for one of their clients on a 5-year rate at 3.89%. So under 4% for 5-year money is starting to look pretty strong.
That's pretty good, eh?
That's very good, yeah.
That's what you and I were talking about. If we can get it in that 3.75 range, then things should start cooking with gas.
It will definitely help pick things up. And, one of the things we did, our next slide here just kind of shows a bit of a graph. And if you look at the red line there, that is last year, 2024, you'll see how we had October, November, December up above. And then you'll see the 110, which is the January 2025, again up above those last 2 years. So we are seeing some strength to the market. We're not seeing anything crazy, which is indicated in the stats and in the amount of sales, but at least we are seeing those positive signs of life coming back to the market. So it's nice to see some activity. People are getting to sell. So, and then the last thing kind of wanted to just chat about was the Bank of Canada rate. They did do since our last conversation, they did do a 1/4 point drop, and this is a chart just talking from a bunch of the big banks, the big 6 out there, of where they figure the rate policy will be and by the end of the year. And it's interesting. We have between 2 and 3% of the Bank of Canada. We're already at 3%. So I think Scotia's probably missed the mark on this one. But there was a report put out by BMO, their economists the other day, that they feel if the tariffs do come into play, that we could end up seeing that Bank of Canada rate down as low as 1.5.
Yeah, I've heard a lot of. I watch Bloomberg every morning, and I've heard a lot of talk that they're expecting 3 rate cuts even into June.
Yeah,
like a 0.25, 0.25, 2.25. I don't think we're going to see anything dramatic unless we see tariffs. But obviously, our economy is not doing that well. Even our employment numbers we did this morning, not strong still. So unemployment's still high. And obviously, there's a lot of capital being kind of like directed into the United States. So they definitely need to do something to kind of stoke this economy.
Yeah, so it was going to, I think it's going to be a really interesting year to see how this all shifts and works out. But I think there's opportunities are going to be great for mortgage renewals and stuff like that for people coming up. It's not nearly as bad as we were sitting with 6 months ago, 7 months ago. So lots of talk right now. And I think next time we'll try to get Marlon back in from CIBC to
He was just on the
talk
phone with us.
Yeah, I know. I actually tried to get him to come in today, but every time I went looking for him in the office, he was busy. So we'll get him in next time. But we can just chat a little bit about, the variable versus the fixed right now, because they're finally getting into that.
Yeah, you just
even
said that
territory.
there was a rate. You said a 5-year rate at 3.
5-year rate at 3.89%, which actually I was quite surprised to hear this morning. So
Because that the longer term rates have been kind of like sticking higher, right? Like,
Yeah.
and that's good to see them start to come down, right? So
yeah, definitely. And if you've been in a variable rate mortgage and you've watched your payments increase, at least you're now over the last 4 months starting to watch them come down. So which is excellent.
you know who the people are going to be whining right now? The people that had a lot of cash and they had it in GICs and T-bills. They were getting like 5.5% and stuff like that, right?
And that's
And that's gone now too, though.
it's interesting. Depending if you're the investor with the money or the person borrowing the money, you're either you want the high interest rates or the low interest rates. There's trying to find that happy medium.
I saw that. I saw the rates go from like 5.5 to like the renewals are in 2.89 or something like that, right?
And I think that's part of the reason you're seeing some people moving back into the stock market as well, with the, getting those 5 and 6% dividends, right? So
there you go.
Way to look at it.
So yeah, next time we're gonna try and do it actually out of a.
Yeah, we're going to go look at a condo next time in Aqua, which is the new development on Okanagan Lake. So we'll be live from there and kind of show you guys around at the same time we talk about interest rates with Marlon, and we'll try to get that.
And we'll get Marlon to go in the lake in a polar bear swim.
Yeah, let's see if we can do that. If you can convince him of that, that'll be. We'll record that.
I think he's going to make me wear that Florida Panthers hat or something like that.
Aren't you supposed to wear one of his jerseys or something?
Something like that. Yeah, I think if he's on again, he's going to bring it.
Yeah,
Anyway.
exactly. Perfect.
All right, we do thank you for watching.
Awesome. Thanks, everyone.